Hi, welcome back to FutureFast, and we've once again got Loretta with us. And for those of you who are here for the first time, I really urge you to look up the last two podcasts with Loretta, where first part where she talks about her journey, and second part where we talk about pretty much all the keywords in the blockchain and Web3 space, and a lot of perspectives and also some experience as well. So please go and get it. And also, if you're here for the first time, I think you should start subscribing, catch up all the other podcasts. Some great conversations are here, and enjoy the ride. And Loretta, once again, thank you so much for making time. This has been planning and finally getting to do this podcast, and finally now again getting to do it with you for the third time. Wonderful. Thank you so much for making time.
Thank you. I think those that have listened to the other two are probably sick of me by now. So thank you.
I don't think so, because I'm following up on this, so I'm sure they would also have got into the similar thing of, okay, what now?
And we've had a healthy dialogue. We haven't agreed on everything, and I think that's always really good. You need to have healthy, differing dialogues and differing opinions, because this is how the world works. If we all agreed on everything, it'd be very boring.
Absolutely. So, I'd like to agree with you, but on the areas where we disagree, I mean, that's me. So, and thank you for being what you are, right? I mean, it's that's what makes healthy people and the whole ecosystem better. So, we have to, before we jump into today's core of Future Friday, there's one part we had to talk about was decentralized autonomous organization, DAO. That was your favorite. You kept talking about it. Though technically DAO was not really something attributable to blockchain itself, because there was the DAO of sorts which came in much before that. I think even the decentralized part, for the audience and listeners, please check out even in the first part and second part. In part, Loretta also talks about it, mostly in the first part. So listen to the first part before that. So yes, DAO.
Yeah, so DAO, decentralized automated organization. That's a lot for people to get their heads around. So essentially, okay, at the moment we have companies, and companies have boards of directors, and those boards of directors are responsible for company activities. They're also responsible to when the regulators come to question them. So we have boards of directors who are accountable. In the world of a DAO, decentralized automated organization, we no longer have people. So these company structures are decentralized, and they're run and automated by code. So this is causing a very big problem globally for regulators, because when a company goes defunct or something bad happens, they can go to the board of directors and maybe jail the board or a couple of the board members. There's lots of people on boards in India that have been jailed over the years. But so what happens when there's nobody to blame? So these new distributed models are becoming a very interesting system. So in the world of what we call decentralized finance, which is essentially everybody in the world can now be their own bank. So decentralized finance is different to traditional finance, that it's peer-to-peer banking. So I can do access, asset management, trading, arbitrage, wealth management, all the things that a bank does, a person can now do. So it's difficult for regulators to get their minds around this, because regulators are always regulated intermediaries. But when you take the intermediaries out of the equation, the question comes up, A, should regulators be bothering to regulate? And B, how? So it's an interesting question amongst all the standards set at the moment. That's difficult enough, decentralized finance when I'm acting as a bank.
Right.
So add a DAO into the mix. So some of these, these decentralized DeFi systems are operated on protocols, and the protocols are not operated by people, they're operated by code. So really blow all the regulators' mind. You've got these decentralized automated organizations that have nobody behind them. It's just code making the governance rules. And DeFi is one of the building blocks of DeFi is these new corporate structures. So like everything I always do, when it puzzles a regulator, I break things down. And I've always said, in the world of decentralized finance and DAOs, people write code. I mean, if we all believe that everything is really decentralized and nobody's behind anything, we're going to live in a very unreal world. So the problem is that a lot of regulators are saying now that coders can be blamed if the code's at fault. But, if a coder is a 16-year-old kid that's sitting in his father's garage in Delhi, should he be, under criminal investigation for AML law, or can SEBI drag him in to be questioned? So there's points about how far regulation can go with code and with the people behind the codes. I think sometimes it's valid that we look at protocols and they're not as decentralized as we probably think they are. I mean, I always use a good example, the Ronin hack. I mean, that was on a decentralized network between protocols, but the Ronin bridge itself was run by 4 coders. So when they hacked all the money that moved across protocols, there were people behind it to blame. So I've looked in these structures a lot. I've written a lot of papers around it recently because these DAO structures have really, 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 really got my brain thinking. So I think the best way to probably regulate them is more like a limited liability company. Some jurisdictions have gone so far as to write legislation around this, like in the Marshall Islands. And I think the first movers in these things often end up having a sense of regret, because I'm not sure the legislation that is written in the Marshall Islands is a good one to follow. So what I'm seeing is a lot of organisations are trying to move their structures to the Marshall Islands, not for the right reasons, for the reasons that they don't.
That's the unfortunate part.
Yeah. They don't want anybody to think that they're going to have any liability. And, people need recourse and liability. And if, people get defrauded, and investor consumer protections are there for a reason. We don't regulate because we as regulators have a big stick. Regulation is put in place to protect people, to protect investors, to stop things in the world of AML. Nobody wants people to blow people up. Nobody wants girls to be trafficked. So if we look at it in the context of why regulation matters and actually how we can regulate these models, it's very important because we can regulate them. And I always say to people, I built some of the first high-frequency trading systems when we moved from floor trading in derivatives on the Sydney Futures Floor to computer systems. And I remember the securities regulator in Australia, trying to figure out what these models look like. So you go back to basic principles. Everything has a principle. So I don't find DAOs and decentralized finance that difficult if you break these things down and look beyond the technology. What is the use case, or what is the technology or the product or service?
Well, Loretta, before you get into the use case part of it, here is my perspective or take on the DAO. I think one core thing is like what you mentioned, that traditionally one is that this is code driven, right? But I also feel that DAOs, unlike the LLPs or the other private limited companies in the Indian context, wherein the compliance system tries to, one is that it's an unfortunate way of looking at it, that if something goes wrong, I'll have somebody's ears to hold on to, right? And DAO doesn't give that. I think other way, I look at it actually otherwise, that DAO is a system wherein it brings in a sense of accountability for a larger stakeholder. So every stakeholder gets
the governance model.
Yeah, if he can,
governance model works.
Yeah, if he can have a proper governance model in the DAO, I think that is how the DAOs also can be very successful and meaningful. That governance part has to be very strong, and then it becomes more self-regulated. You don't need an external regulation agency. This governance model itself can make sure that DAO is more equitable, sustainable, and delivering on its promises to even as a business.
Yeah, and I agree with that. But the problem is too when you so I mean I've written a lot of self-regulation. In the absence of regulation, self-regulation is the only way we as an industry. We did this with Bitcoin Australia in 2014. But the problem with the co-regulation model, and it does work in certain industries, like in the US, they've had securitization, which was a co-model of regulatory and self-regulatory model. But the problem is a lot of the larger countries in the world, the more mature markets, don't like self-regulatory models. And the law is the law. And I think this is the problem we're struggling with at the moment, because we haven't gone into the world of where code and law can be the one and the same thing. I think
it is happening, right? See,
yeah, but it's not.
incidentally,
But no court of law in the world at the moment will take a self-regulatory model over what is written in the Corporations Act.
Agree.
So,
yeah.
so I think we can't theorize around that these structures will work in the governance models, because at the moment they're not there, and regulators will not allow these models to work without some sort of recourse. And I think
I thought this was a great example, right? There was an old interview of Narendra Modi when after he became the prime minister for the second term. He traveled to US, and there was one of the US senators was interviewing him, and I saw that video clip some time ago, wherein he asked them about blah blah whatever the political thing, right? It's good to have you back as a prime minister. US-India relationship is going to grow and all that. But one question he asked is that how do you see the media being not playing a very meaningful role and things like that, right? And he responded to it in Hindi, but what he was trying to say is he actually refers to a story of media reporting one of the hijack situation, right? An Indian plane got hijacked and taken to Afghanistan. So at that time, some of the media people went about interviewing the relatives of the people who were hijacked. So that gave leverage to the hijackers to negotiate more hard, and Indians had to give away some very celebrated terrorists, had to be handed over to them, and then got that. In fact, a minister's daughter was also part of the hijacked thing. I think you might remember that.
Yeah, but these geopolitical maneuvers, I think with sanctions and terrorists, like that's a very different world.
After that, there was apparently a debate about the role of media, and media people should be punished for giving away the leverage and spoiling these things and all that. And what he said was very interesting. See, he's a politician, he's a lawmaker, right? But what he said is that thereafter, the media agencies called for an internal meeting, and they took a review, and they arrived at a self-regulation model even before government called for a meeting and reviewing, saying what or what not. So the media agencies called together and said that, okay, this is where we should draw the line. Of course, that was done at one point of time, but then again, they crossed the limit when it came to other war situation. And again, Bombay's attack, 26/11, again, media went about, it was almost aiding the terror.
Yeah, I mean, I actually funded a movie called Hotel Mumbai. I was actually in the Taj the night that it got attacked.
Oh, wow.
So yeah, I understand very much how that affected me for many, many years. And I ended up funding a movie called Hotel Mumbai, which I suggest, not on this topic, but everybody go and watch it. It's got Dev Patel in it, and it's a very confronting movie. It was done by Filmhouse that I work with in Australia, but also in India, and it's a very confronting movie. But the media really did fuel a lot of that. But I think that's a very different argument. I think media laws.
So unfortunately, the self-regulation failed in it. So,
yes,
but what I liked
so that's what I was
about
about to say.
But whole argument, what I liked is that it's a healthy move if a government steps back and allows the concern to figure out and do some bit of self-regulation, right? So
And in this space, we've tried to self-regulate. In the absence of self-regulation in the blockchain space for the last 10 years, we've always come up with self-regulatory models, and it's interesting, and in India is a good example. People always say to me, for money laundering terror purposes, Bitcoin's terrible, it's anonymous, and it's actually not anonymous, by the way. It's what we call pseudo-anonymous. We can track and trace every single Bitcoin that moves because it's on a distributed open ledger. If it was cash and somebody moved money from Punjab,
this is one of the things we were supposed to talk as well here. Yes, please go ahead.
So if cash is the most decentralized thing, so if someone was going to move cash and from Punjab into Pakistan, we'd never track and trace it. But if that's paid in Bitcoin, it's the best law enforcement tool we've ever seen, because we can see the Bitcoin move on an open, transparent ledger that the entire world can see. So, when people say to me that, it's only used for money launderers and terrorists, that is actually so not right. You obviously don't understand the technology. But the problem is, trying to, in self-regulatory manners, we've always done that. We implemented KYC on exchanges, and KYC means know your customer. The big exchanges in the world all follow a KYC model, because none of them want to get in trouble for money laundering or terrorism financing, because you go to jail. It's very different in the world of securities breaches, security law, or prudential, because they're not criminal offences. They're what we call civil penalties. So you'll get a big fat fine. But if you breach AML, terrorism laws, you go to jail, and that's what should happen. But so the self-regulatory models work, but in some of the bigger jurisdictions, in the G7 and the G20, that doesn't fly. And we can think about, we can think about ethically how these things will work going into the future. Maybe in a decade or 20 years, code will become law and law will be code, because that's one of the big conversations at the moment. We could actually now, because we have this technology and these smart contracting abilities, we could actually write the law into the code. So nothing could happen unless the law is enforced at the code level. But I can tell you now, the standard setters I deal with, this is not going to happen in my lifetime, to be honest. So I think, we can be hopeful and happy that self-regulatory models come, but the law is the law at the moment, and you cannot go against what the G7 or the G20 say. If you breach the law as a company or a jurisdiction, it's going to be very damning. So we can't think that far in the future, because law can be enforced. Self-regulation can't be enforced, but there are models of self-regulation models that do work. As I said, I wrote them for Bitcoin originally in 2014 because we had no regulator that would regulate us. So in lieu of that, we had to come up with self-regulatory models, and our code of conduct in Australia, everybody can go and read it. It was under ADCA, the Australian Digital Chamber of Commerce. Our code of conduct was around all exchanges have to do KYC, know your customer, for AML purposes. We had rules that were enforced that we took out of securities law and out of AML law. But then all the regulators have now come 6 years later and said, no, law is law, and self-regulation won't fly in Europe. It won't fly in the US. It doesn't fly in many of the Commonwealth countries, of which India, Australia, Canada are. So those models might work in the future, but we have to look at how they're working at the moment. So I think on back to these DAO structures, it's all very well to say something is decentralized. And everybody tells me that Ethereum is so decentralized, and I look at these protocols, but, there's hacks between decentralized protocols. There's still centralized players that can overtake another node. So I don't think in the concept of where we will be is where we are at the moment. And of course, innovation takes time. This technology is still quite new. And I think in 10, 15 years, a lot of these problems will be solved, but the self-regulation model at the moment, and I can tell you because I deal with every standard setter in the world, and the G20 will not fly, and it won't fly for DAOs. But so I think in compromise of that, you have to look, and the industry, if you want to operate these models, we have to look at limited liability mechanisms, because I think that's what regulators will take as a compromise.
But they won't remain DAOs anymore, right, if it goes in that direction?
Well, yeah, but but the function of what they do, it doesn't matter what you call it. This
Right.
is the other
So
thing.
then what's your take on this DAC, as they call it, right? Distributed Autonomous Corporation, for a larger framework and larger structure? What do you?
So,
what's your take?
So again, I think you can't go big until you've looked at the principles around small things. So I think DAOs will be limited liability, limited liability companies in some form. I think the cross-border nature of what you're talking about becomes a little bit more complicated. But if you read into some of if you read into how the big tech companies at the moment work, they're still domiciled somewhere. Facebook is domiciled in the US. Some of them are actually domiciled in Bermuda, oddly enough. But there is a jurisdiction where you're domiciled. In these new structures, I think people are trying to take out that, because when you domicile a company, you're still subject to that country's law. So if you break the law and you're a company, regardless of if you're a protocol designer or a company operator, you have to follow the law of jurisdiction, and we are seeing now large global arbitration committees set up, because the nature of digital assets and this technology is cross-border, it's global, it's decentralized. It's going to be very, very difficult. I mean, I wrote some of the first custody laws in the world and regulations around digital assets back in 2019, because it was the one thing that kept me up at night. And there's a saying in blockchain, my wallet, my Bitcoin. It's not your wallet, it's not your Bitcoin. And we've seen hack after hack after hack of people leaving their digital assets on an exchange and those exchanges being hacked. It's very ironic because, this Bitcoin is such a decentralized asset, but these exchanges, these big centralized exchanges, hold everybody's their asset in a centralized database. So of course they're prone to a hack. So I thought very much about, how do I write custody? How does one have custody of a digital asset? Because it's not like holding, gold in a vault or money in a bank. It's so super complicated, and it's cross-border. But that took me a long time, and that was a collaborative effort against all the standard setters. People, a lot of the security agencies, a lot of the defence agencies, people that secure nuclear facilities, cryptographers, really deep people that were deep architects of some of these protocols, because this is a joint effort. And if people are not they're not content that the safety of their asset is going to be safe, they are not going to get into the asset. And we're seeing this in the US with the run on the banks. People take their money out of the bank, a bank collapses. The same thing in crypto. If people don't trust, I hold self-custody of my assets. Like, I don't let an exchange hold my Bitcoin. I don't hold it on what we call a hot wallet, a device, or even my computer. I keep it offline, off the internet, so it's somewhere that no one would ever find it. But that became a problem for me as well, because I then was thinking, I own this asset. To me, it's like owning gold or my house. What happens if I die tomorrow? How do I give this asset to my daughter? So it's really it's conjured up a lot in my mind. And there was a big problem. There was a custody issue around a few years ago around a Canadian exchange, and this Canadian exchange runner disappeared to India. He apparently died in Rajasthan, but there was a death certificate, but no body. $126 million of people's money that was on this exchange disappeared.
There are a lot of conspiracy theories about he faked his death and probably enjoying that money with a new identity.
So this is the point. So
but there were documentaries made otherwise also. His family have no clue, so it is possible that he's actually dead. So
but who knows? We don't know. But it showed me that custody and proper custody of this asset was the most crucial thing to social and mass adoption.
Correct.
And it still is today, because I can't be giving licenses to a bank who knows how to have money, because I can guarantee that the Citibanks and the JP Morgans in the world don't have a bunch of hackers in there.
We had a situation some time ago in Bangalore. One person, there was some police case against him saying that he does Hawala, and he was basically the middleman for many of the influential, powerful politicians and businessmen in putting their money into Bitcoin. And the rumor goes that one of the politicians' son beat him up because the crypto price had fallen. You remember some years ago, Bitcoin fell down from it was at $19,000 and it came down to almost $7,000-8,000.
Oh, I've seen. Don't forget, over 12 years, I've had a Mount Goth hack.
Yeah,
I've seen
you've
Bitcoin.
seen
I bought
those.
Bitcoin at 40 cents. So you imagine, I've held Bitcoin since it was 40 cents. I've seen it go to 60,000, back down 20, up to 30, down to 3,000. So if anyone ever tells me that Bitcoin's dead, I laugh. And the conspiracy theories around Indian politicians are always
what
awesome.
happened? No, this politician didn't realize that. They thought they were told it's a safe keeping of your money, and the media said Bitcoin is dead because it was more than 50% fall, right? From 19K to around 7-8K. So the politician apparently asked this guy that, okay, just return the money. He said, this is not the time to take out. If you take out, you will get 40% or so less. So he told this to his son, and his son went and beat him up. And a whole lot of very important people visited that boy in his hospital because he was in coma. And media was showing a lot of people visiting him. The concern was, if that boy were to die, all their money is lost because he was the single custodian.
He had the, it's interesting over the years I've learned. And I always say to people, this is a very speculative aspect.
I think it's a very, very important thing. The custody part, what you're talking about, is extremely important, and most people don't understand that.
No, and to be like, honestly, I hold self-custody my Bitcoin, but I've been in this space a long time. Most people that get into the space, they don't understand self-custody. So we call that cold storage. And that's why I say to everyone, if you're interested in this, Andreas Andropoulos is probably the best explainer of custody of a digital asset in the world. He has many YouTube videos. He talks about what we call hot storage, and cold storage. So hot storage is where
Indians should understand cold storage very well, right? We are the people who go to lockers and put the jewels there, so people do understand cold storage.
But they don't. But when you're looking at how you hold cold storage,
but it's not those people who are invested in digital assets. Those people don't understand that.
Do. Like when I had an incident the other day. I use an exchange, an Australian exchange, to move my holdings from when I move it from cold storage, which I have what they call a nano wallet. So I can plug that into my computer, unplug it. It's not connected to the internet. Somebody would have to find out where I kept that. And to me, that's also a problem because people kidnap people for these things. And, but it's a difficult process. And I had opened I'd moved my Bitcoin or whatever I was trading anyway onto the exchange, and I had I didn't have my VPN on. I did have my VPN on, and some hacker from Brazil, I figured out, hacked into my movement on my exchange wallet in a fraction of a second. And I had to shut my exchange, but I know how to do that. So I was looking at how easy this guy hacked into my where I'd have to hold it on the exchange to trade it. And I thought, my God, like, I understand this. So if I was a normal punter, and a person that was dabbling in crypto, and that happened to me in my customer experience, and I lost my digital asset on an exchange, I'd never go back. And I find it very I get post-traumatic syndrome every time I move my digital assets, because it's a very self-custody is the best way to hold it, but it's a very complicated method.
Well, that is the bridge, right? The bridge is the weakest point, right? When you move from your wallet to the exchange. But unfortunately, I was in one pitching session, one startup from Mumbai, I think it was. They were pitching for funding, and they were talking about having built ecosystem for Web 2.0 businesses to move to Web 3.0, right? And they were talking about a cross-chain application. And when I was asking, how are you addressing the security of the bridge? He says, what security? We are doing blockchain. Everything is very secure. I'm like,
this is why we had a Ronin hack of how many hundreds of millions of dollars moved, because this bunch of coder kids thought that it was, don't actually understand the technology.
Unfortunately, they were not kids. So I was like, what are you talking about? And they said that We are doing blockchain. Blockchain is the most secure thing. I was like, okay.
Yes,
I
the
just stopped
blockchain
asking
itself.
questions after that.
This is the education piece, because this is why I keep saying to people, blockchain is the most secure database we've ever seen. But if you go and give it to an exchange to hold your digital asset and they hold it in a
The bridge
centralized
is the weakest link, but people
Yes.
don't understand.
So if you're looking at dabbling, please go and watch Andreas's videos, because there's no one I know in the world explains this better, hot storage and cold storage. Because if you're seriously going to hold, I have this saying, my Bitcoin, my wallet, my Bitcoin. If I don't own that wallet, it's not my Bitcoin anymore. And we've seen so many hacks, and the industry gets such a bad rap because these things get hacked, and they get hacked because the custody is not proper. Not because of the asset, because the way that the asset is held in custody is not good. Just like, banks are not the most secure things. But now we've got a bigger problem because, under some of the regulations, we have to move financial data and ID data when we're now going to be exchanging value on exchanges. To me, this is quite possibly the biggest national security problem I've ever seen in history, because SWIFT moves bank data, but everybody in the SWIFT network trusts anyone. So now all of a sudden, we as this ecosystem where nobody trusts anybody, where everybody's suspicious of anybody, and everybody's moving, ID data and financial data, when a centralized solution or an exchange gets hacked again, it will be the downfall of the industry. And it's not talked about enough that we need better education from the people building these protocols, the regulators and the industry. So I talk about this all the time. We have to be collaborative, and collaboration is the new survival, because if we don't, as industry, sit down with the lawmakers and the policymakers and the regulators, none of this is ever going to work. Because technologists are not policy writers, as I keep saying, and policy writers are not technologists. So we all have to sit at the table together, regardless of whether you like that or you don't like that. That's just the way that it needs to be, because otherwise we're in grave danger of having a technology that's not adopted, or it's used for the wrong reasons, or policymakers just outrightly ban everything because they think it's bad. So right. I think we have to work together, whether we like it or we don't.
Right. And Loretta, one more question to you. You've been a banker, right? And banks have been very effective in primarily managing the custody of assets of their customers, right? To a great extent across the globe. And with all this technology, right? How do you see, I think, this is my thinking, that in future, there will be few banks who will come forward and start becoming custodians of digital assets as well as a service.
They're doing it now. There's many banks in the world, but the issue is, if you look at the problem is you've got to look at something like the SWIFT network, which is the trusted messaging system to move funds across the entire world's banking system. Now, that's been around for a very long time. The standards and the cybersecurity and what we call ISO, the messaging standards.
No, but in a geopolitical world, SWIFT kind of lost some sense of credibility, right?
It works, but it works because
it works, but if a country can block it in a situation like what's happening in Ukraine and Russia, where US blocked SWIFT transfer to Russia, so if it can be used by countries for their geopolitical reasons, then that is where now a lot of other contrarian are opening up opportunities for other products also to come in the space. India is actually a very strong contender on that, right?
Yeah, but sanctions and the sanction rules and the OFAC decisions and this, but SWIFT as a messaging system, don't look at it anything beyond a messaging system.
No, that is true. But unfortunately, if it gets used in this situation, then...
No, it's just a messaging system, and everyone forgets that. It's a messaging system that has very, very, very in-deep standards that are set, cyber standards, technical standards. It works, but you can't place the SWIFT network where we are with crypto, because it's not the one and the same thing. The traditional finance system and the world of digital assets are not one and the same. I understand why the FATF is saying, all right, We're very concerned around, about sanctions and people obfuscating, sanctions, and we're going to input because we see the risk of movement of digital assets and value is a risk for money laundering and terrorism financing. So we're going to tell you as an industry, have to have a SWIFT-like rule, which they call under the FATF what we know as the travel rule. And it just came into you would have seen that the enforcement agency 2 weeks ago updated the AML CTF law. So now every crypto exchange in India must be registered under the FIU for the purposes of AML CTF. So it means that they need to report every transaction over, I think the general threshold for suspicious transactions in the banking world, it's about $10,000 US, but in the world of crypto, it seems to be about the thresholds $1,000 US or €1,000. So anytime an exchange sees one wallet move more than $1,000, they are mandated by law to report that to the enforcement agency and the financial intelligence unit. And if requested, any exchange has to show the beneficial who is behind the wallet that is sending the Bitcoin or the Ethereum or whatever they're sending, and who is receiving it. That is a mandatory legal requirement for crypto as of this year. And that was brought out in 2019 by the FATF. I was at the FATF meeting last Friday, and they said categorically there are 20 countries in the world that have enforced this.
How do you see the role of a decentralized exchange in such a scenario? They are not.
So that's so a lot of exchanges are going, oh, we're a decentralized exchange. We don't care. Okay. So how does the decentralized exchange work? And I've done a lot of work in many African countries, seeing where the big movements in decentralized exchanges are. Don't forget, I'm a regulator. I've worked with regulators. I come from a very compliant world. So I've looked at how a decentralized exchange works. So what happens is they just actually act as an agent. They match the buyers of the crypto, and then the buyers and the sellers themselves have to move the money in their bank account.
KYC. Zero KYC.
And that's going to be problematic. But the FATF said, we don't care. We're going to enforce this in that world. So how do you do that? Every country in the world, and I thought about this for about 9 months because I was working in a very large African country, and it was my biggest problem because I worked out peer-to-peer. There was about 70 million users of Bitcoin in decentralized exchanges. They just act as escrow agents. So again, you take everything back to principles. When there seems to be no solution about regulating, you break down and you break down the problem. It's like doing an equation, and you go back to the principles of law. Escrow, in every country, there are escrow laws, and there is escrow requirements in SEBI, there's escrow requirements in every security agency in the world, or the securities regulator, that escrow agents have to act, and there is an AML element of that. So regardless of whether you're a decentralized exchange or you're a centralized exchange, you're still going to have to be mandated to ensure that anybody that's using you as an agent, an escrow agent, still perform KYC. So there is no way of getting around it. And exchanges come to me all the time.
No, but that's why they are moving out to the countries. There are enough countries who give you a blanket welcome, right?
No, that's not. So what we're finding out, and it was very paramount at the FATF meeting on Friday, if countries are not compliant, and if countries are not implementing recommendations...
But you know how many countries are not aligning to it.
Yeah, but they will not be allowed to send any transaction globally. So you imagine if you're a business sitting in that jurisdiction and your transaction is blocked to a compliant jurisdiction...
Dubai is allowing registration of these decentralized exchanges. So how will you handle that? You can't take out Dubai.
So... you can under Dubai now. They have a number of regulators. The competent regulator for AML CTF is not Dubai. Dubai is not a country. Dubai is
city. Yeah.
The AML regulator for the UAE is the central bank. Dubai is not a country. And these AML CTF requirements are at a federal level for jurisdictions.
But you know what is Dubai doing, right? They have within Dubai, of course, Dubai is part of UAE, but within Dubai, they have this rule applicable for anybody who wants to do this business. But then they have an economic zone
Yes,
within
no,
the
they have
zone,
many.
they
They have
get
many economic zones. They have many economic zones and they have many
no.
regulators.
There is
But
one
no,
within
there's
the
not.
zone. They give you a
DCCM,
free hand.
there's DCCM and there's BARA. There's two regulators. But the competent supervisors for what I'm talking about for the trouble rule and the FATF. And by the way, the UAE is on the grey list of the FATF for non-compliance with this. That's very problematic because once you go on a FATF,
But do you see that changing? Will UAE
yes,
align? Will they become compliant?
Yeah, of course. Because
But you know how many companies have gone and registered.
yes,
So where do you think they will hop to next?
But they have to go and stand up and be properly
In Bahamas is another place.
business. What's that?
Bahamas, that's another open door for them.
No, so I have actually written regulations in a number of common law countries. I'm actually writing the model law at the moment for the entire Commonwealth. So that's 54 countries.
So Bahamas will change too?
Sorry?
Bahamas will change as well?
So Bahamas kicked themselves in the foot because they actually had no regulation. So when FTX was set up there was no regulatory oversight, but it had nothing to do with them being a virtual asset service provider.
No, that is true, but they are open for all the decentralized businesses.
But if you are domiciled in the Bahamas, you try and get money in or out, or you try and deal with another jurisdiction. So what happens is once a jurisdiction, we call it jurisdictional arbitrage. People will always hunt for jurisdictions that have no regulation or very little. But the problem is now when the G20 and the G7 get together, and there is under the FATF 297 member countries and another 100 and something that are observer. When you are a business that's sitting in a non-compliant jurisdiction and you're trying to do transactions with a compliant jurisdictions, they will be blocked. So you won't be able to get money in and out of a bank. We still need bank. Everybody tells me, in this world of blockchain and cryptocurrencies that we don't need fiat currency. I can tell you right now,
we need.
You need to pay your staff. They can't eat on Bitcoin. You need to pay your rent. You have to have an interaction with the financial system. And if the on-rails and the off-ramps of crypto and the financial system are not aligned, you can be blocked. So it will destroy your business and it will destroy a jurisdiction's reputation.
So how much of runway do you give for the decentralized exchanges, given all the things that are happening now?
I think so even if you're operating a decentralized exchange, there is still an exchange behind a decentralized exchange. I think what you're seeing now that and what we call is beneficial ownership. So any jurisdiction that is going to house a company that is a virtual asset service providers, they will have to know who is behind the company, where the company is domiciled. It will have to have a head office requirement in that country. It will have to be compliant with security law and AML law. So what that means is, in essence, if you break security law, you'll get a big fat fine by the equivalent of SEBI. And if you breach AML law, you'll go to jail. So there will be recourse onto the people behind these organizations.
So how do you see the functioning of decentralized exchange in this scenario then? Then you're saying there won't be any more decentralized?
I think they will be able to operate as escrow agents, but I don't think this concept of being completely decentralized.
So you give what, 3 years to it, Max?
I think less than that. I think I'm probably
less than that.
Less than 18 months.
Are you sure? That's being very aggressive.
But I've been very aggressive in this for the last 5 years with the bigger players that have been seeking out jurisdictions that they wouldn't need to be properly regulated in and have operated with no regulation and no recourse. This has been picked up by the global community. There's zero tolerance. In the next 16 months, no one exchange is bigger than the market and no one person has a cult of personality. So I think the problem with crypto and people, some of the bigger exchanges that we've seen globally have been allowed to do whatever they wanted with no recourse. You are now seeing coming out of the US, there is serious enforcement coming out of the US for people that are operating out of the US, but using US clients. You will see very, very severe enforcement and international collaboration between law enforcement agencies take these non-compliant players out of the market. And I tell you, it will happen in the next 18 months.
Wow. Okay. This is almost like a prediction as well. I wanted to get you to make some predictions as well, but okay, this is so. Loretta, now we get to the Friday. I mean, you already talked about the future, which is almost near. You're saying it's not even future; it's now in the next 6 to 18 months. So, what's your take on future? I mean, of course, we did talk about it. We did talk about banking and all these things from a future perspective. But what is, in general, your take on future? How is it going to be?
So, I mean, it's a big, very large thing to cover. So I'll take just financial technology. So financial technology, which I think things like blockchain, AI, financial technology has changed everything that we've seen in the last 10 years. It's made it's brought efficiencies, lower costs, and much more transparency to systems. And we can't deny that. I think now what we are seeing is this clash, this emergence of all these emerging technologies that have sort of been on the fringes, becoming mainstream. So you've got AI, you've got blockchain, you've got the ability of Web3, which allows us to move assets and information, which is much more granular than Web2 was. You've got new business models that are arriving out of these pay-to-play, these metaverse models. Everybody in the world, I think, will interact half their life in a virtual scenario, not so much in the real world. I think by 2028, 2030, I think banks are not going to go away ever. And if anybody thinks that, they're obviously quite distant. They're quite wrong, because people told me, and banks were very scared when blockchain came in and Bitcoin. They were like, "Oh, we're going to be disintermediated." The internet didn't kill banks. They just have to
won't you agree that banks will be weaker than they are today with all the CBDC happening, with the central bankers taking over?
I think they will just change their business models, and they have to be more customer centric. So I think technology is going to force every vertical.
I keep making one. I keep making one prediction, but how do you challenge it? I say that with the coming of CBDCs, we will have some of the leading banks coming up with their own stable coins. For one, in India, with the CBDC, SBI will possibly come with their own stable coin, and likewise in other places. So what's your take on that?
So I completely agree. I think going forward, the model that we see...
I thought you will disagree with me. Okay.
Yeah, so the model we're seeing of sovereign states issuing fiat currency. Now, fiat currency has a very particular definition. It is not money. We are going to see all types of private money and public money interface. We're going to see private companies issuing money. We're going to see central banks will always issue money, but we're going to see this very hybrid movement of money. People will be able to use private money, a stable coin. They'll be able to use fiat currency if they want. I don't think that central bank digital currencies are ever going to be this nirvana that people keep telling me. And I've been saying this for a decade. I worked on looking at baskets of CBDCs, with MIT back in 2014, how you could peg the GDP of, say, a country like Jamaica, where something like music is not quantified, or tourism. How we could peg these different elements of GDP into these digital forms. I don't think that's going to be in the form of CBDC though, but I do think there will be stable coins and different models of the stable coin and fiat currency merge. So I think there's going to be many different models. What we see now is just the beginning. People will interact with whichever system of money works for them. And I think that's why central banks are running at the moment to implement these CBDCs. I think the best model for a CBDC is not to take out the commercial banks and these hybrid models where the central bank still issues money to banks like they do every day, like we call it the repo market in the world of, if you understand monetary policy and fiscal policy, because banks serve a purpose. They interact with customers. Central banks don't want to do that, because the concept of financial stability is a very serious thing. And that's what central banks need to be worried about. They shouldn't be in the business of dealing with people's wallets. Some countries will do that, but I think you'll see places like China do that, but they're doing that that for very different reasons. They're doing that to control populations, and we're seeing it with their AI, their facial recognitions.
Japan's doing it, UK is doing it, India is doing it, Canada is getting ready.
Yeah,
with
but
that.
I don't think, I think the use cases, and there's a big...
Australia is also working on a pilot,
Yes,
right?
yeah, but many pilots. But it's not just one. It's not just the central bank issuing retail money. I don't think that'll ever work. I think you're seeing interesting models of CBDs.
No, both retail and
I think the corporate and the cross-border is going to work.
Mostly the cross-border, which is fantastic, right? It's going to make businesses.
And I can tell you right now, the Russians have been working on this since 2012.
Oh yeah, Russia as well. Right.
You know, so if anybody thinks they weren't, well, you don't know what planet you've been living on. But there faces the issues if we're going to be doing these CBDs on a blockchain style system. It's not going to work as blockchain stands at the moment, because the throughput, one transaction is never going to work. The financial system transacts trillions of dollars and trillions of transactions in a second. No central bank pilot to today has solved the throughput issue. And I've looked at maybe 49 use cases globally. The best one, probably one that comes closest, is Sweden. So I can tell you right now, in my prediction, retail central bank digital currencies will not work. The cross-border...
Wholesale is working, yeah.
Cross-border...
Yeah, the cross-border is primarily on the wholesale.
And wholesale will become very, very important, but people will use a very mix, depending on what they want to do, of private and public money. So that's my prediction. In 5 years, we won't just have central banks issuing the only fiat currency with the only money we can use. You'll have tech companies, you'll have banks, you'll have every man and his dog issuing some sort of stable coin. Now, I think what will need to happen, though, for this to become much more mainstream is that central banks stop worrying about retail central bank current CBDCs, but they start to look at how they can streamline prudential regulatory requirements around private issuance of money. And when I mean that, I mean proof of reserves, collateralization of the assets to hold these stable coins where they are. I think the way that blockchain works and crypto exchanges work, in the way that they can show proof of reserve, will be able to be transported into the traditional finance, because
that's like making it a bank.
Yeah, but the proof, but the ability for blockchain and companies, exchanges, to show in real time, because of the blockchain technology, their proof of reserves of crypto, is the most fundamentally important use of the technology that we see when we're talking about private and public money. You need to understand that the peg is not going to break. And if Circle tell me that their USDC stablecoin is one-to-one backed by the US.
So slowly you're saying first the KYC and now the proof of reserve. So you will stitch. You want the cryptocurrency business to be mirroring a banking operations then, from a point of compliance.
I think for stable, no, not cryptocurrency. Cryptocurrency is not a stable coin. This is the issue too, which I see a taxonomy of terms needs to be written, and very quickly, so we're all talking about the same thing. And the problem when I talk about a taxonomy of terms, a definition list of what a cryptocurrency is. Not a stable coin. A stable coin.
I understand that part, but even for a cryptocurrency, right now, any exchange, it demands a KYC for consumer interaction. But then you also mentioned that you also need to have, if you need to be able to provide a proof of reserve on that, which is exactly how the banks operate. So essentially,
banks don't have proof of reserve, and this is the problem. This is why you're seeing the banks in the US go down, because there is no ability. The last government in the US removed the ability for banks to show the proof of reserve. So there's actually, ironically,
at least, India doesn't work like that, right?
Yeah, so India works very well at that, but in real time, you can't do that in the financial system as it stands today. In the blockchain world, a proof of reserve. So if you go onto one of the big exchanges, you see their proof of reserve in real time. That's because it's on the blockchain. In the financial system, we don't see that.
But stitching it to a compliance ecosystem to be able to take an action on that, from that sense, it just becomes another completely compliant ecosystem,
But it has to
which
be.
is
If
but
you're going to
but
survive in this world,
but
you have
you
to.
are the one who kept talking about it, that the people who are in the compliance ecosystem and lawmakers and policymakers don't understand technology, and this is
But the
significantly technology plays,
technology,
just not economy or economics or
but the technology
finance.
itself can make us compliant. A proof of reserve is that if you can look on the blockchain and the proof of reserve, that makes companies compliant. If you can look, as I said, for AML CTF, you look at the movement of Bitcoin on wallets around the world, we can see exactly what terrorists is moving Bitcoin. So the technology itself makes us compliant. Law enforcement policy writers don't understand at the moment how to use the technology for compliance.
Right.
The KYC can be completely automated, but that ecosystem and the current one, they need to have the same compliance models, but they can be done very differently in the world with technology. KYC, digital ID linked to your KYC, to the way that you interact with your health records. There's so many added advantages.
What happens to privacy with all this?
But this is the problem about a CBDC. So privacy, I think, has been one of those
Not
things.
just the problem with CBDC, right? With all of this, I mean, you need to have KYC on everything. You need to be visible to all your transactions.
But there's a difference between privacy and secrecy. This is where everybody gets confused. Privacy is not secrecy. The regulators are not asking you to not be private. And I think any regulator, I sat in meetings, the regulators are not saying there's anything wrong with privacy. Some of them are in certain countries where privacy is not as big an issue as in democratic countries, but privacy and secrecy are very, very different things. Secrecy is a problem. If you're trying to be secret and you're trying to obfuscate the use of a cryptocurrency by using something called Monero or
it's a thin edge, right? I mean, it's like the two sides. See, if I want to say that I want to remain private, and your argument is so you want to remain secret.
No, you can be, I'm private. I don't keep my Bitcoin on a ledger on exchange. I keep that privately. That's not being secret. When I move it onto an exchange and I change in my bank account, I pay tax. There's a very big difference between privacy and secrecy. Secrecy is what people that are being criminals prefer, because they don't want to see money of movement of money, politically exposed people. But I don't think, I think the regulators are a point. They're saying, yes, we understand that the privacy features of blockchain and some of these coins is because people want to be private. We're just saying that if they're going to be used for criminal activities, there's a difference between privacy and secrecy. But we're seeing also now, if I want to hold my digital asset in Monero, okay, use Monero or Zcash, which are privacy coins. The issue is, okay, I can leave them there, but what can I do with them? At some point, I have to move them onto a KYC exchange, move it into Bitcoin, and then to get it out of the financial system. If you want to interact with the financial system, secrecy is not going to work. Privacy can still work. I mean, Bitcoin is, it's pseudo-anonymous. It's not anonymous at all. It never was. But I think, so there's a very distinct difference between the word privacy and the word secrecy. And I think that's the fundamental difference. We as humans can do whatever we want. Like you want to keep your money in Bitcoin, you never ever want to take it out of that, you're private. But the minute you want to put it back into the financial system, that privacy goes. So but that's a trade-off between how you want to, if you want to interact with the world as it stands in a real way, or you just want to live in the world of the Bitcoin, and the blockchain, which at this point in time is not feasible because you can't eat with Bitcoin.
Right. Wonderful. And do you want to make any closing statement before, I don't know, do you still have time or you?
Yeah, I've got a couple of minutes. Friday afternoon. So the world, as I see it today, is going to look terrifyingly different in 5 years. I don't know what.
Terrifying in what way?
I think AI is probably, the way that we're seeing AI interact with these, decentralized automated organizations and algorithms becoming front and center of where technology is merging. I'm terrified because I don't know where it goes. I think
I see that as a biggest positive thing which can actually save us. But okay, that's one
Well,
we disagree on. Yeah.
I mean, I have an issue with, say, we've seen ChatGPT wasn't existing 6 months ago. I put a sentence into an email that I wanted to write this morning to a regulator, actually, and I put it into ChatGPT. I couldn't have done that in 4 months. But I have a daughter who's 19. She doesn't have the lessons that I've learned in life. I think experience in life and lessons is
No, but
very...
why is it we as parents want to look at our kids to have our own starting point? Their starting
No,
points are
I
different.
think
They will have different
AI
lessons. It's
I
only
think
fair that way.
AI and the fluidity of how I actually makes things faster is not good for the human brain, because if they have something that is generated, when I think about stuff and I think about regulation,
How do you propose to get humans to evolve to be able to live in Mars or find another planet which is similar to Earth? And I mean, we need to be progressive, right? We need to evolve further. I mean,
do we
we
need to
can't
go
be
and
doing
live
it
on,
from our starting points. The starting points
but
have to
do
be
we need to
different.
go and live on Mars?
We might have to, because we are draining the Earth of water, at least drinking water.
But then
Our
we
food
have to
security
think
is in a situation, our water security is a situation.
but I don't
Of
think
course,
AI model is going to solve.
interestingly, we have a guest. I think his podcast is up today, Machaya. He said that population will not continue to grow. He says that it will cap at 8 billion. He says it will not go across to 10 billion or whatever. It will be
Why?
around. Well, he says that we have a way of turning out. So Earth has a way to balance it. In fact, his argument is even in India, population rate has gone down significantly. Average has come down to 1.7. If you have to be growing at the same rate, it needs to be 2.1. Europe hit 1.7 or 1.4, I think, in most of the European countries. US is also hit way below 2. India is hit below 2. China is hit below 2 almost 30 years since now. And there are pockets which are growing. Nigeria is growing. Indonesia is growing. But there again, it is actually declining. So he argues that it's not a fair argument to say that, people only are looking at, it's a linear thinking which shows us that population is growing linearly. You step
But I
back and
don't
look
think
at
it
the
matters
population
whether it
thing, it's
goes left
actually...
or right. I don't think about the population growth or that. I'm worried about a computer or an AI generated model making
No,
my
with
daughter.
given all those situations, that's where I was coming to. But yeah.
But I think, we as humans, we above everything that computers can do or technology can do, we're still people. We love, we hate, we're emotional. And humans crave other humans. It's what we do as animals, I guess. And do I want to live in a world that's not important to my kids or my kids' kids, or that she understands everything because she doesn't have to think about it? Like I do my times tables. I learned as a kid to do my times tables. I was a trader for 20 years. I can add up in my head many numbers as you want, multiply them. And I look at my daughter and the kids and the coders that I deal with in blockchain, they can't add up without a calculator. And to me, as a human, that is so not progressive. We're progressive in the fact that we have something else to do it for us, but you can't look at it in linear terms. Like, we need to think through things as humans. I don't need a computer to make me think through when I'm running around regulations or technology, because there's consequences, and there's consequences to humans.
No, but don't you think it's wasting our brain power trying to store things for easy information that's available across our fingertips?
But is it stalling our brain power, or is it stopping our brain power?
No, but look at it this way, right? 450 years ago, when books came up, the biggest thinkers of that time actually said that books are the most dangerous thing. It's going to spoil us. It's going to make people mad.
Yeah, but I think an AI
and it was the same thing, if you remember, when I think I'm of the same age, similar generation. So when we were young, the televisions came and there were hordes of articles talking about that this generation is going to be wasted because they're all sitting in front of the idiot box. That was the term for television. So they're going to be wasted. But
yeah, but I
most
just
of the
think
generation didn't do so bad.
we need to think about ethics. Maybe I'll phrase my answer in a different way. Ethics, I think, are very important. And when I mean by that, human ethics. So I do a lot of work. So if you look at the blockchain environment, if you look at the amount of men that code And I look around, I mean, I work very deeply in this ecosystem. The majority of coders in blockchain protocols are kids, guys between 23 and 28. Now, I'm a woman, I'm a mother. I think of things in a very, very, very different approach because I have this maternal instinct. And coders are predominantly men who are 20-something writing code in the way that they think about things. I do not think that is good for humanity, because you need to have your empathy. There's things about me as a woman that's very different as a man. But all of a sudden, if we've got a whole generation of men or boys coding protocols that have got no concept of ethics and how that fits into what they're doing, I don't think that is good for humanity. That's what I mean by that. So I think empathy and ethics and computer codes without the added things that we as human beings generate with emotion is not good. I don't want a bunch of 26-year-old kids coding every protocol on blockchain. And there's not enough women in that. So this is a problem.
So give me one good thing that you think will be the best thing in the future, because this is terrifying, you said. So what's going to be great?
But I love it. I mean, I sounded too. I mean, I work in this ecosystem. I left a bank because I hated the way that banks made friction out of systems. I see the use of blockchain when used properly, and Web3 and digital assets and ecosystems leveling the playing field for humanity. People, it used to be a privilege to go to school or go to university, or but now with technology, I can be a kid sitting in a small village or Kashmir, or in northern Ethiopia, or in Sydney, Australia, and I have the opportunity with this to change my life. I don't need to get a degree from Harvard or a fancy master degree that tells me about a SWOT analysis. Everybody will be able to be educated in a way that is it's not hierarchical, and everybody, if they want, will be allowed to be an entrepreneur. And the ability to move value and information across these open systems will make the emerging world more powerful than what people call the first world. And I see places like India and Africa writing the new rules for the next 50 years. And that's what excites me. And I think that is so exciting, because for the last 100 years, we've been dictated to by a certain number of powers and people that told us they were going to write the rules and they were going to be the only rules. The world is, with decentralized systems, it's much more democratic. I think when governance models can be built into systems, and we're not relying on very few to make the rules and enforce the rules. And I think technology will see us bring out new asset classes and new business models and new ways for people to have a living. And I think the disparity between poor and rich is really going to be brought back to a level playing field. So that's why I get excited. Maybe I don't sound like I am, but I also think through things as a realist. Regulations to me and stopping bad players who use technology all the time. I mean, this is not, bad players will always do something to do bad things. Right. Technology is just a means. There is more good in technology than it is bad, but we need to make sure that the bad and nefarious actors can't survive in the world that we have, because none of us want, as I said, people to blow each other up, little girls to be human trafficked, or drug cartels to ruin the lives of our kids. If we think about that in the context of why regulation and we stop people using those technologies, I think we're all on exactly the same page. We see this as a very positive and great step for humanity. But I think we are still people, and people will still do bad things. And if they can find a way to do bad things with technology, I always say, the bad guys do things really well and they cooperate really well together. We on the good side are very bad at collaboration, very bad at working together. And so, so that's the irony of how...
You're doing an amazing job of trying to work together with a lot of people. So kudos to you.
I have a hashtag, collaboration is the new survival, and we're all in this together. And so it's not a cop-out for me to say to someone, oh, that's not my responsibility. I'm a coder. I don't need to know about, human trafficking. I'm saying, you do. We all have responsibilities as ethical human beings to make sure that things happen for good reasons, not bad reasons.
Absolutely. Loretta, thank you so much. And for all the listeners and audience, the link is below the podcast. You can follow her, look at what she's doing, and keep track of it. And she is so busy, but one amazing thing about her, she responds. So
yeah,
do follow. You can communicate with her as well and keep track of all the great work she's doing. Thank you
and
so much, and do
please,
share across with everybody. Loretta, thank you
thank
so
you
much.
so much for having me. As I said, I'm not a one-person show. I can't do any of the stuff that I do without everybody's help. And I answer everybody. Maybe it's the motherly instinct in me, but we've all got to work together. And I don't take the excuse you're too busy, and I don't take the excuse that it doesn't matter because it doesn't affect you.
Well, I have always found the busiest people are the ones who are able to make time for most things. So,
wasn't that what they say?
Confirmed once again.
Says? God gives those that are busy more jobs to do because they're the ones who can actually execute them.
Wonderful. Wonderful. Thank you. I think that's a great line to close that as well. Thank you so much.
Thanks so much. It was great to chat with everybody. It was a very lively discussion too.